Hi, friends and family. Tony Warfield here. This is me excitedly getting to share Census website. Census is the organization that I have partnered with in order to provide financial services to my friends and families and future clients. I wanted to make sure I express my deepest appreciation for Census and what I truly believe it will do for our community. But before I get started with any particular training, I want to make sure that the legalities are taken care of. So here it goes. The information shared in this presentation is provided to the public via the census.com website. The information shared is not written or produced by Tony Warfield, me. For more detailed information about Census, please contact Tony Warfield, me, directly, or feel free to visit the census.com website. The Census series of videos is for my personal use and shared via internet on an unlisted channel. This is so family and friends can view the information freely through word of mouth and sharing. You will not be able to find these videos open to the public. So I have what is called a My Why with Census, and I'm going to open every one of my videos with this because I want everyone to appreciate why this is so important to me. And it's not long. So my why, Census. I truly believe every man must take care of his family at all costs. The horror of losing everything while facing the possibility of not being able to provide tore me to pieces and haunted me for years. Even long after I recovered, I worked myself to the bone, aging myself to make up for all my losses. I needed answers I never could find. Thanks to Census, those answers I sought are now being shared, allowing me the peace of mind and security hardworking people deserve. Thank you very much, Census. If that's something that resonates in your heart, I want you to take the information that you'll be getting from this series of videos and all the videos that I post, and please feel free to comment and share and give me a call and let's see what we can do to help you feel the same way I do, not only about the company, but about the protection that I have for my family. So with that, let's get started. Okay, today's discussion will be on life insurance. So what is life insurance? Life insurance protects families and businesses from financial loss associated with the death of a loved one or key employee and as a financial tool for retirement planning. Life insurance enables individuals and families of all income brackets and lifestyles to maintain financial independence in the face of financial hardships. Coverage is just as important for two-income families as it is for single-income families. Stay-at-home parents also need protection to help cover the cost of services they routinely provide, such as cooking, cleaning, and caring for children. Retirees who are living on limited income also find peace of mind knowing that an aging spouse will not be faced with a financial burden after their death. So some of the key benefits of life insurance would be that it protects families by providing benefits to survivors when a primary wage earner dies. The money from a life insurance policy can be used to help families to cover expenses such as a mortgage, tuition, or sending your children to college. Often the benefits from a life insurance policy can keep a family from going into poverty or having to be on welfare. And that's a big deal because, we can start talking about a lot of the social challenges that we have with a lot of our children being wards of the state. And friends of mine might hear me say, be careful when you eat at the king's table. And what that means is when the government is paying to take care of you, you have to abide by their rules, and that limits you to be able to do a lot of the things that you want to do. A lot of times our people, we find ourselves in a box because we don't want to lose, whatever the government assistance that we're getting. So we don't do more for fear of getting less, if that makes any sense. So being able to have a policy that protects your family from welfare and from poverty is a big deal. It also protects the businesses that use life insurance to protect jobs and families from financial hardships that can result from the death of an owner or a key employee. And the businesses use life insurance to protect against financial uncertainty and secure employees' futures. So with census, there are four general categories or types of life insurance. That's the index universal, term, whole life, and variable. First off, there's the index universal life. This is what I have, love it. Index universal life insurance policies are a type of universal life insurance. These types of policies are similar to traditional whole life policies because they build up cash value over time and provide lifelong protection as long as you pay the premiums. The death benefit can be increased, subject to insurability, of course, or decreased at the policy owner's request. Premiums can be flexible and paid periodically to meet your personal financial needs. Now, what does that mean? Well, the premiums that you pay, you can understand that a certain amount of your premium is going to be going in, to cover the cost of insurance, and the remaining portion of the premium will go to build your cash value. And we have other videos that will explain that in more detail. Along with the providing a death benefit if you die or when you die, certain indexed universal life products also provide tax-deferred growth of your account value. Growth linked to a formula based on changes in equity index, flexible premium options, a variety of riders and waivers, and 2 death benefit options. The typical use for IUL is a balanced approach to life insurance. Next, there is term life insurance. This is another policy that I have. Term life insurance covers a defined period, 1 to 30 years, and only pays benefits if you die during the defined period of time. Depending on the terms of the policy, premiums will remain constant or increase each year. Some policies can be renewed at the end of the term, but premium rates will usually increase. Term insurance does not offer cash value buildup, and it becomes more difficult to attain coverage as you get older. So this is a big deal. So when you have someone who's middle-aged like me, or someone's a little bit older, you can imagine that the premiums are going to be a little bit higher. Why? Because, hey, you're older. The chances of you requiring or needing the monies from your insurance policy increase as you get older. The typical use for term insurance is designed to cover needs that will disappear in time, such as a mortgage or tuition payments. Initially, premiums for term insurance are lower than for permanent insurance, which enables you to buy higher levels of coverage at a younger age. So this is a big deal. So imagine you're 24 years old. You can get away with a term life insurance policy for $500,000. I don't want to give you any price quotes, but it would be significantly less than what I'm paying, that's for sure. I have friends of mine that have paid, as low as $60 a month, possibly even less, for $500,000 in coverage. You're paying just for insurance. It's pure insurance, no different than you covering your car or something like that. It's just pure insurance. So the amount of money you pay for it is rather inexpensive. Next will be the whole life insurance. Whole life insurance is the traditional type of permanent life insurance. Generally, the premiums remain constant over the life of the policy. A policy accumulates a cash value which can be borrowed against, surrendered for cash, or converted to an annuity. The cash value grows based on a fixed interest rate. The cash value is different from the policy's face amount. The face amount is the money that will be paid to your beneficiary. Cash value is an amount that increases over time, tax deferred. The cash value can be used to cover premium payments, to purchase additional insurance, or as collateral for a loan. That's a key point, by the way. Loans must be paid back with interest, or the death benefit paid to the beneficiary will be reduced. And what does that mean? So if you decide to take out a loan against your cash value, the interest that you pay, actually, that's going to be added to your account. So it ends up washing out. So I actually have a video that discusses how those loans work. The policy also can be canceled or surrendered for its cash value. You may owe taxes on some of the cash value if the sum exceeds what you have paid into premiums. What does that mean? So your whole life policy is actually on a fixed account. So if your whole life policy earns interest, you don't pay taxes on the principal amount of money that you put in, the premiums that you paid. But the premiums that have accrued interest over the life of your policy account, that interest is subject to tax. The typical use for a whole life policy is often used to obtain lifetime protection, assuming paid premiums, along with the cash value accumulation. Now, let's talk about the paying of the premiums. If you don't pay the premiums and you're building cash value, we covered it a little bit earlier in a previous slide, but I just want to make sure we're clear. If you have been paying premiums, and let's say that you've accumulated $10,000 in your whole life policy, and you ran on some hard times and you were not able to, cover those payments. The good news about the cash value is if you ran on hard times and you cannot make your insurance payments will be paid by the cash value that's already in your account. So that means that even if you can't make additional payments, as long as you have not exhausted the cash value in your whole life policy, you're still covered. So imagine, say you lost your job and you didn't find another job for a year, and your insurance, it requires an insurance payment of $50, right? Or $100 or $200 or whatever. As long as you have the cash value in your account to cover that $50, that $100, that $200, you remain insured every month that it deducts that $50, that $100, that $200 from your account until your cash value is exhausted. Now that cash value might be enough to last you 10 years. So if you're only unemployed for a year, you can start making your payments after that year, and then you can continue building your cash value. How awesome is that? Next, there's variable life insurance. Variable insurance is a type of life policy where you can choose among a variety of investments offering different risks and rewards. Stocks, bonds, combination accounts, or options that guarantee principal and interest. Death benefits and cash value will vary depending on the performance of the investments you select. By law, you'll be given a prospectus for variable life insurance because it is regulated as a security. This prospectus will include financial statements and outline investment objectives, operating expenses, and risks. The typical use, often used to obtain permanent protection with the potential for high growth. A little about that. First, I'm not licensed to offer variable life insurance, but I do understand it. So one of the things that's important is just like with stocks. I used to be a day trader many years ago. So you have to be willing and able to sustain a loss. See, unlike your fixed or your IUL insurance policies, if the market were to just tank, then the principal in your variable life insurance, the accumulated money that you built in your life insurance policy, that's also subject to tank. So one of the biggest challenges that I had that got me involved in this industry in the first place was back in 2001 when we had the dot-com crash, and 2008 when we had the real estate bubble burst. You're talking about losing half your income in 2000, half your income in 2008. And if you're not in a position to where you can sustain any real losses, then variable life insurance might not be for you. But if you're someone who has the intestinal fortitude to be able to handle variable life insurance, from what I understand of it, it might be something that's very lucrative for you. But that's something that you want to sit down with the proper agent and definitely look at the information for that particular type of life insurance before you move forward. Because once you start investing, you could literally grow a significant amount of money in a day, and you can also lose it all in a day. So that's something that you want to have thorough understanding of before you move forward with it. So what are some of the advantages of the different types of life insurance? With term, a policy can cover financial obligations that will disappear over time, such as a mortgage or college expenses. When you're young, premiums are generally lower than those for cash value insurance. I recommend that for all young people, actually. For whole life, lifelong protection as long as the premiums are paid. Premium costs can be fixed or flexible to meet individual financial needs. Variable lifelong protection as long as the premiums are paid, higher growth potential than other types of life insurance products. An index universal life, lifelong protection as long as the premiums are paid, the cash value accumulation potential that is typically higher than whole life policies. With all good things, there might be a few not so great things. So with term, it provides protections for a specific period of time. It's not for life. So that means at the end of the term, the policy is over. The premiums increase as you grow older and your health status changes. That with anything, it makes sense. You know, if you're sick, they're not going to give you this really, really cheap life insurance policy because chances are you're going to collect. Policies don't usually build up a cash value. Just like I said before, term insurance is pure insurance. You're just paying just for the insurance. For whole life, it's designed to be kept for a long term. So if you're trying to get a fast return from your insurance, whole life is not the one for you. Canceling a policy after a few years can be expensive because of the surrender charges. So, you know, like I said before, it's a long-term policy. So if you're surrendering your policy less than the surrender period that your particular policy suggests, you can be hit with a significant number of fees. So you definitely want to make sure that you look at the fee structure as well as the benefits, the pros and the cons for a whole life insurance policy. Variable is subject to market risk. It's considered a security, so it can go up with no limit, and it could also basically tank all your cash value. The cash value of a variable life policy is not guaranteed. If the policy doesn't perform well, the cash value and death benefit may decrease and possibly lapse. So definitely look at that. And with your index, it's limited index selections, subject to maximum credited caps. Now, I want to talk a little bit about that. So I'm going to do a video for the IUL, but when it says subject to maximum crediting caps, it's usually around, I don't know, 13, 14, 15%, maybe more or less, depending on the type of IUL you get or how your contract is written. But the idea behind that is, which is why I love the IUL, you're building cash value in an account that without 100% guarantee, if the market tanks, just like if you had a variable, if the market tanks, your policy could lapse. But with an IUL, if the market tanks, you just don't build any interest on the account. Your principal is protected. So how awesome is that? So yes, that was a lot of information to cover, but it was pretty general. So I have a few videos out there I'd like to invite you to take a look at to discuss in more detail term life insurance, index universal life insurance, and whole life insurance. I won't be covering variable life insurance as I need a securities license to have that discussion. Don't have it yet, but trust me, I will. But with that, I'd like to invite you to contact me directly. If you have any questions or comments, you can definitely give me a call directly on my cell phone. That's 424-298-1726. My email is tonyrwarfield@gmail.com. And you can find me on Facebook, Twitter, LinkedIn, pretty much everywhere, but those are the ones that I'm primarily hanging out in. I think I'm on Instagram too, but I think I might need my son's help with that one. So with that, thank you so much for your time once again, and I look forward to, sharing the next video with you. Take care. Bye.